U.S. job growth surged in January, with employers hiring the most workers in 11 months. If this points to underlying strength in the economy, why did Fed Chair Jerome Powell pledge this week that the U.S. central bank will be patient, also implying quantitative easing? Well, with the cold weather across the nation, you can sit back, relax, while we take a look. Well, I'm not sure if I'm going to be able to answer the question of why Fed Powell was indicating patience and perhaps quantitative easing, but definitely looking at the market when that announcement was made here at this point, you can see we were on our way down, but it abruptly changed direction and headed up right here to the 200-day EMA. So we were flirting with the 50-day EMA there. It bounced and headed on up, which is an appropriate reaction given easy money. Moving on down here into the MAC, you can also see the bottom there. Last week we were talking about the possibility of this turning over, and then all of a sudden the news came out, and then off we go again on the way up. So we're just going to have to follow this here for a while to see where it goes. But definitely you can see that the market was turning over, and then again the announcement at this point here, and it makes a very unnatural sort of rebound in the market. So those are easy to see. Now, looking at the price rate of change, it looks like the fast line did come up to the slow line, but it didn't go through, so it reflected back down. And here in the RSI, it's continuing on up, but not real strong in the last day or so. The stochastics also hit that point there, an abrupt change and headed on up with the fast line moving through the slow line. So we'll watch that. That's an overbought territory here. The volume, the volume wasn't too bad. It's been declining recently, but based on that news from the Fed, it picked up a bit in the last few days, which is expected, and it looks to be okay. But now in here to the Williams did hit that bottom there, moved on up, then topped out there. So it still looks like a little bit of a trend change perhaps is maybe in the cards for the future. Maybe not that steep, but still a little bit of a decline from the earlier period in early January. So let's move back up here. So I'm just going to sit back and be patient here because these kinds of bits of information can change a market at any given time, and it can change it for certainly intraday trading, perhaps maybe even a few days or even longer, depending upon what the news is. I think that the Fed news does have some market changing information that will last for perhaps into next week, maybe even the week after. So I'm just going to sit back. I'm not going to make any decisions here. I want to see how the market reacts in the next few weeks. For now, my call last week was definitely wrong, but who would have known that the Fed was going to make that announcement? So the market headed on up. In here to the MAC, I've got some drawing here that's going to obscure some of the actual charts, but the fast line is still heading up. The slow line is also still heading up. So I want to see how this matures coming here into February before I do any buying. I'm not going to do any panic buying at this point in time. I'm not going to do any selling either. I'm just going to sit back and watch the charts. Back up here to the price chart. We're wrestling with that 200 EMA right now. So that's going to be an interesting point of reference here for all the technical traders as well. I want to see what happens with that resistance level here. So coming tomorrow, I have a bit more information for you that should be interesting. But for now, I'm just going to sit back, watch, and wait. So for today, that's ChewDog Charts. Thank you.